Hello and welcome to Trading Supra. We're looking at Wednesday, the 24th of January, 2018. And for the first time in quite a while, we're looking at T-bonds and how PhilFinder Plus Automation can handle opportunities that arise in bond futures. And so looking at Wednesday, we can see just day session to day session, the market gapped lower below the prior session's low as well as the close. And so what should be a bearish situation, that should being implied by the gap lower and the time spent below yesterday's low, halted rather abruptly shortly after the open. The market reversed, was unable to really do much in terms of filling the gap, and has since now trailed off. And so what typically happens at an extreme like today's low is one of two things. Either the market will feel around here and maybe make a slightly lower low and then bounce, or it will just take off to the other, keep going, sell off, and this will just be a truly bearish situation. And so that's the idea behind the trade, is an area where the market is likely to have a reaction, and a decisive reaction. And so it's either, if you get filled and then ends up being a loser, it's a quick and small loss, if there is one at all. Oftentimes, if it's going to break through the level, PhilFinder won't even locate an entry, and there won't be a trade in the zone. And then on the other side of the coin, if it's the type of situation where the market's testing and can't quite sell off, and the bid decides to get strong and take over, and price wants to bounce, PhilFinder in those cases, it will very often be able to find a trade, and you'll be able to be a part of the bounce. And so that's the idea behind using this zone in the first place. And so now we can see the market has just touched. I typed in 148.09. That's a tick above the session low, and then just one tick below just to create that zone. So 148.07 to 09. And with regard to levels in bonds, when you do type those into PhilFinder, just this note here. First, let me just adjust the quantities real quick. You want to do it in decimals. And so you don't just type 148.12, 148.16. Just take 100 divided by 32. That's 32 ticks in the bonds to go from one whole price to the next whole price. And so just divide 100 divided by 32, 3.125. And then from there, just wherever you want your zone, just multiply it by 3.125, and that'll get you your decimal 30 seconds, if that makes sense. So if you have questions on that, just put it in the comments and I'll respond. But otherwise, we'll just look to see and let this play out here, and it'll demonstrate how PhilFinder Plus Automation handles trades in bond futures. And so now we've got a potential stopping price. The market has touched down and created a scenario where we may see a reversal, is what PhilFinder is suggesting by putting up this blue arrow at 48.09. We'll see if that actually happens or not. Sometimes you might get a stopping event, but then no fill. And so it's just a visual heads up. It does not affect the functionality if you see it or not. PhilFinder will do the trade whether you're sitting at your desk or not. So you can have this running in 2 or 3 different markets if you want to start being a part of moves in other markets. You can automate that, and it can you can still have a good amount of control with the various inputs that we have built into PhilFinder, but then along with that, you can safely then use it on other markets that maybe now you're just too busy to take on new markets. So anyways, you can expand your scope a little bit. That's one way you can use it. You don't have to, but just thought I'd mention it. And then also with regard to locating zones, we do have a new video training series on how to find zones where the market's likely to turn. And so if you'd like more info on that, that training is also on our website. We have a member section with video training in it. You can see long 148.11. I will zoom this in a little bit. And so stop just outside of this structure here, 148.06 stop, long from 11. So that's an initial risk of 5 ticks. And then we've got, they're not all that visible at the moment. but you can always check these in your control center. But it looks like here, I'll turn on the crosshairs for a moment. Smaller target for quantity 1, 148.14. So 3 ticks in favor of the 11 entry for the smaller target. Then the larger target's at 148.22. And so that's 11 ticks up off of the 148.11 entry. Each trade for each market, it's always dynamic. It's not a, it's just always dynamic. It always bends and adapts to whatever the current definition of normal is in whatever market you're trading. And so the idea there is to put in profit objectives where you have a very good likelihood of getting filled, and that being the point of trading is to get in and get out with more than you started. Okay, and so smaller target just filled, 148.14 smaller target for quantity 1. Okay, so trading up, almost filled here, not quite. Market's back down to 48.19. Touched 22 twice. That is a limit order working up there, so just no fill, even though it touched, no fill.
Order filled.
Okay, so after a pullback to 48.16, the market did push through 22, and in so doing fill the larger target. So long from 48.11, picked up 3 ticks for the smaller target, and then eventually, after quite a delay and a little bit of a winding road, the market did push up to 22 for the 11 tick larger target. The idea again being this is supposed to be a bearish situation. We can see the market had stayed away from this low for quite some time, which creates some potential for tension. It creates a potential for a difficulty if and when the market revisits this extreme. And so that's the idea behind the trade. We don't know. Like I said, the market sometimes will test through here, the bottom falls out, and away you go. And the market just goes lower rather easily. Other times, though, it might feel around the edges, maybe even push a little further to a slightly lower low. And then instead of gathering sell side pressure, the sell side pressure is overcome by all new, brand new bid strength, which reverses things, and the pre-existing sell side pressure becomes buy side pressure when they decide to buy back their shorts, and it makes for a rather quick winning situation if you're long. And so that's the idea behind the trade, and that's how PhilFinder Plus Automation performed on Wednesday the 24th at the T-Bonds just session low retest. And so if you have questions or comments, you're welcome to put those in the comments. You're welcome to subscribe to the channel. I put up videos on a regular basis showing how to put it to use and how PhilFinder can make your trading potentially much more enjoyable, less stressful, and possibly even more successful. So again, if you need anything, you're welcome to put a comment in, and I'll look forward to seeing everyone in the next video. Thanks so much. Take care.